Ashutosh Raghuvanshi, Managing Director and CEO with Fortis Healthcare, to walk us through what transpired for the hospital business for the quarter gone by. Have things really normalized? What is the update on medical tourism, and how exactly is the new normal now for the entire hospital industry or the healthcare industry? Dr. Raghuvanshi, good morning. Thank you for joining us. Dr. Raghuvanshi, the big question is that have things normalized now for Fortis Hospital, the non-COVID business? The non-COVID occupancy, is it back to the pre-COVID normal business cycle for Fortis?
Good morning, Nikhil. I would say that there is still a little way to go. However, the COVID numbers have come down dramatically. It was less than 3% in the last quarter. And we see that the occupancy levels have come close to normal, but they are still not at the same level as they were pre-COVID. One of the contribution to that is because of the international patients. That traffic is still not there because there are still some restrictions in travel. So that is a segment which we are seeing still not coming back to normal.
If I look at the AROP and the average realization per bed, that is at a record high. Why is that gone at a record high when the average occupancy was pretty much average?
Yeah, this is a function of the case mix essentially. We saw that during this quarter, the number of surgical cases, especially the complex and high-end surgeries, was higher. The ratio was higher, and that is what drove the ARPOB higher. Mind you, we haven't taken any price corrections over the last 1.5 years or so. So this is essentially because of the kind of nature of cases which were done. And my feeling is that a lot of some pent-up demand in joints, etc., has also been coming, and that has been driving ARPOBs higher as well.
Are now at 20%. There were a lot of extraordinaries. There were some mergers which in a sense impacted your margins for last couple of quarters. But is 20% the new normal? Are you on course now to perhaps go closer to what the industry average of mid-20s is?
So we expect this trend to continue, and this is a result of a lot of initiatives which we have been able to take, and we expect once we have resolution of our other legal issues, etc., we should be able to sustain this and take it from here. So we would consider this as a new baseline for us. We had earlier stated that we would achieve about 18% of EBITDA in the hospitals in, say, 1.5 to 2 years. But we have achieved that during this quarter itself. And we feel that that is not only sustainable, but we will grow from that.
Good morning. This is Nayantara. I wanted to also ask you about your diagnostic side of the business. If you were to look at a lot of deals, a lot of M&A activity, a lot of consolidation that is taking place in the diagnostic space, and if I do see SRL, there has been an impact that we've seen on the numbers. Maybe fewer people are now getting tested for COVID-19, etc. What's the larger game plan when it comes to SRL?
So as you know, Nayantara, that SRL has in last about, say, 3 years or so, has underperformed to some extent. And there are a variety of reasons for that. But we have a new management in place over there. And we see that the true potential of that business can be realized. We did an acquisition in the first quarter where we held 50% in DDRC, a leading chain in Kerala, which we took to 100%. And that has been a very good acquisition for us. At the same time, we need to look at this business in entirety. We believe that the diagnostic business has its own dynamics, which is slightly different from hospital business. And in order to realize the full potential of it, that needs to function slightly differently. So we will evaluate all possible options to see how we can take this business to the next level. But we are very excited about the kind of growth we are seeing in diagnostic, though our numbers don't exactly reflect that at the moment. But the pieces which we are putting in place, especially on our digital app and developing our capabilities on different channels, we expect that this business should have a very remarkable growth in next few years. So as far as the diagnostic is concerned, we would at the right time take the necessary steps to consolidate the gains which we can have from that business.
So from what you're just saying, and if I were to connect the dots where you're saying it works differently and needs to be seen independently and you will do certain evaluation, what does that mean? Could it be a demerger, value unlocking?
I think, all options have to be on table and they have to be evaluated. Whatever is best in the interest of all these stakeholders is the direction we will take. But Nayantara, we have not yet decided as to what that approach should be, but we will take that decision in the due course of time.
Hi, Dr. Raghuvanshi, Aisha. Just wanted to understand, earlier it was COVID, now it's dengue. What are you seeing in terms of occupancy levels?
So occupancy levels have definitely improved, but they haven't reached the pre-COVID levels. Some of the segments like international are still to come back to normal, but we are seeing a steady growth happening in the numbers. And we expect the occupancy levels to go above 70% during this quarter, though the first month of this quarter is a festival month and that traditionally sees a little bit of dip. But overall, we expect the occupancy levels to be above 70% during this quarter.
That's something you highlighted earlier as well. I just specifically wanted to know about dengue, considering, the cases are pretty much on the uptake. What is your sense? I mean, numbers and occupancy levels aside, is this an area of grave concern? And could we see the numbers only see a sharper uptick in the days to come? Or do you think things will get a little bit better?
In our view, the dengue sort of outbreak which happens, it's a seasonal thing, and it is quite related to the change in temperatures. So as the winter has been setting in North India and rest of the part of the countries also, the temperatures come down, the dengue usually subsides. So I don't see this as an ongoing concern. Yes, it is true that there are a number of cases at the moment and they are marginally higher. But if I was just reading in the newspaper today that the city of Gurgaon, for example, had 33 cases. So that's not a very alarming number. And my view is that this is already on its decline. And as the winter sets in, we should see the dengue subsiding completely. And I must add that it has not been a significant factor in pushing either the occupancies or anything. We did not see an extraordinary large number of patients getting admitted with dengue.
Okay, so let me understand purely on behalf of a shareholder. My next question, Dr. Raghuvanshi, is that I can see three triggers. One, perhaps some move on SRL, whether it's a demerger or some step towards value creation of SRL. Second, I see medical tourism, which in a sense has been missing because of travel restriction, that comes back. And third, I see operating leverage kicking in because you're reducing debt. Is my assessment right?
I think those are the three areas we need to keep looking at. Cost has always been a focus for us. And I think for the larger healthcare industry, also cost is an important issue. So we will continue to focus on that, and that will increase our leverage. But one more area, Nikunj, I would like to say we are focusing currently on is the capital investment in our business. So we had earlier committed about 300 crores per year for the next 3 years. But now looking at a sustainable growth and a very robust cash flow situation, we have decided to accelerate the pace of investment. So we are now planning to do about 400 crores per year for the next 3 years. So that will be about 1,200 crores over the next 3 years. 50% of it is replacement and upgradation of the facilities, and 50% of that is for growth capex. But this does not include any opportunistic expansions, inorganic expansions opportunities which we may get going ahead. But right now, we are very confident that we are at the threshold of the next wave of growth for the company. And that certainly would be something to great advantage to all our shareholders.
Would you be able to reduce your debt then? Because if you are looking at growth capex as well as maintenance capex, the numbers which you just shared with us, that obviously will come from your cash flow. Would you be maintaining this current level of debt, or debt also will be reduced because you expect significant uptick in cash flows?
Yeah. So our net debt has not gone up over the period of time. It has marginally gone up. It was like on March 31st, it was 849 crores, which is now about 69 crores. So that's just marginally there. But at the same time, the EBITDA margins have improved significantly. So our situation is that our ratios are extremely comfortable to maintain a similar debt level, because even with this debt level, as our profitability improves, our ratios will become much, much better. So we have sort of put a limit of EBITDA to debt ratio of 1:2, but currently we are almost at about 1:1 level. So we have a lot of headroom in order to do growth capex if necessary, and that would be a healthy level of debt as well. But we certainly are not increasing debt levels from the current level.
Okay, so I take your point that you can expand in a healthy manner without having your debt go out of control at all. That your balance sheet can take all of that. But sir, can you tell us what that expansion could also be? A lot of you have been on record to say how the pandemic has taught us we need many more beds, we need many more healthcare workers. So can you throw some color, because we've also seen hospital firms now come out with their expansion plans.
So the brownfield expansion in our given units, we had already stated that we are going to add about 1,200 beds over the next 3-4 years. Out of that, about 500 we have already added, and the rest are on track. And over the next 1.5 years, all that would be completed. An additional 1,000 beds we have planned within our existing hospitals. These would be fresh constructions within the given hospitals, so they are still brownfield. So that is to the extent of brownfield expansion, approximately about 2,400 beds. Other than that, we, as I said earlier, we are in a good position today to consider any opportunistic acquisitions we may have, opportunities we may get in future, and we would consider those on their individual merits.
Good to hear that. Clearly a lot that's happening at the company. We'll be right on top of it. It's always a pleasure talking to you. Thank you so much for giving us this live interview today.